Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this mid-morning on Friday, June 30th, last day of the second quarter. Just housekeeping, most of our offices will be closed, our office will be closed Monday, and then of course Tuesday for July 4th. Yours truly and my great support staff will be working about a half day. So if you do subscribe to Cabot Top 10 Trader, we will get that out to you hopefully around midday so we can get on with our barbecue plans and whatnot. When it comes to the market, there's really not much new to say. We had a broad market wobble last week, but no real, no damage at all or abnormal action at all in the leading stocks for the most part. And this week we've seen things snap back. As I'm recording this today, there's a good inflation report this morning, so the market's up, so on and so forth. So really, when you look at the evidence, intermediate term trend is up, long-term trend is up, broad market is at the very least healthy enough, and it seems to be actually gaining some steam here. And leading stocks, leading indexes, leading sectors are basically holding all their gains, if not building, on them from the past few weeks. Okay. Now, near term, I'm not a big near term guy. I'm more intermediate to longer term. So take this with a little bit of a grain of salt. But yeah, my horse sense is that some of the growth stuff might need more time. We came down, 5 or 6 days on the NASDAQ, and now we're pushing back up. I'm not saying we have to come down another month, but, it wouldn't surprise me if we have another, like a pre-earnings season shakeout or dip or whatever, or some further rotation into, now we're seeing not just construction housing, but industrials, some cyclicals and some retail maybe, which would be nice to see starting to pick up. So, there's a lot of good things out there. I wouldn't be surprised if some of the stuff that's had huge runs isn't really a buy on strength sort of thing in the near term, but really big picture, which is where I'm focused on. We just had a big bear market, and this continues to have the characteristics of some sort of lift off, blast off rally, whatever you want to call it, where pullbacks tend to be limited and pullbacks tend to happen in a few groups where the money going somewhere else as opposed to the entire market really comes down. So we'll see how it goes. I wouldn't just be cannonballing into the pool, but continuing to put money to work makes sense. In Cabot Growth Investors model portfolio, I wanted to put more money to work this week. We put a little bit to work. We're 30% cash. If we do get some pullbacks, or if we have some stocks that are, we own some of that might, we're kind of waiting for them to kind of, sort of get going. We could average up in those. So we're continuing to put money to work, and ideally we'll be fully invested here in the near future, depending on what the market does. Okay, let's hop in the charts. As usual, I'm using MarketSmith, product of Investors Business Daily. You can learn more at marketsmith.com. It's a great product. So we're just going to run through the indexes as usual. Here's the NASDAQ as of this morning, recording this around 10:30. So challenging its old high here. Again, we quote unquote only, we had this huge run, we only came down 6 days, didn't even hit this is the 25-day simple moving average. Somebody asked me this week, not to go on a tangent, but some people use the 21-day exponential, which I guess works really well. So if that's your thing, that's fine. If you want to use a 21-day, 26-day, we're very simple, where we literally, obviously a lot of people use the 50-day line, and we just divided it by 2 and used 25-day. We've been using it for years, but there's no magic to it. It's just a shorter term kind of moving average. And it didn't even hit that. Now we're back to its highs. Hey, I'm all for things ramping from here. I have no problem if they do. It wouldn't surprise me though, like I said, I am seeing some stocks that, had huge runs. They pulled back. Now they're kind of back here, and they're sort of stalling out. Even though the NASDAQ's pushing higher, they're kind of stalling out. So again, in the very, very near term, I'm sort of 50-50 on, whether we go higher or sort of pull back and have another little shakeout. Maybe the Fed, stays hawkish or whatever. We'll see how it goes. But overall, clearly very, very positive. S&P 500, let me just use the spiders. It's easier. S&P 500, same sort of thing, right back to its high. Looks pretty similar to the NASDAQ. And this week, really, the outperformance has been in the broad market after underperforming last week. So this is the IWM, which came kind of all the way back down to this range we talked about last week. This is kind of what you want to see, is something comes down and it snaps right back. Mike, what if it comes right back down again? Well, then that wouldn't look as good. But you always go with what you see at the moment, and at no point did it really threaten sort of the 50-day line here. So it's looking pretty good. Mid caps, same sort of thing. In fact, I think mid caps are out to a new, highest level since March. So, obviously a good sign, not as strong as everything else, but gaining steam. And the New York Composite, same sort of thing. It's broader, it's got more financials and stuff like that, but closer to its high, but nice snapback from the correction. So, bottom line is I'm a trend guy. Intermediate term trend is clearly positive here. And it was a little bit of, I would say it was a decent test last week, with the broad market. We also saw some of these, you're looking at the financials, and I guess, you had the Fed stress test and stuff like that. There's always a news item they're going to attach to it. But again, this thing kind of pulled back right to kind of the demarcation line, so to speak, the 50-day line, some support. XLF bounced back, KRE. Not that I'm going out buying financials. This one still hasn't bounced much. So again, if you're looking for something on the margin that could be sort of a, bugaboo in the shadows, so to speak, for the market, I'd still think it would be regional banks. But the fact that other financials are acting better, I think is a pretty good sign too. So, when you're looking at that stuff, it looks good. Again, I mean, you're just kind of going through it. This is the XLP. I keep an eye on this every day or two. Still no huge love for the defensive stocks. We're not seeing people pile into that because of the Fed. They might have a good day or two or outperform for a day or two, but that's it. In fact, here you can see, I think last week we talked about how it just started to outperform for a few days, and here we are relative to the S&P 500. It's hitting a new low. Same thing, XLU, utilities. There's these things were, if you look at XLP, now this is not dividend adjusted, but just, well, maybe the weekly chart. It's hard to see because it's so not, the scale is so tight. But, adjusted for dividends, XLP basically didn't go down during the bear market, okay, even though interest rates went way up. So you'd say, maybe these things shouldn't be trading at, 25 times earnings. But, and we know that a lot of institutions were really overweight the defensive stuff and underweight growth and, equities as a whole. So, there might be some of that unwinding going on, but the why doesn't matter. It's more the what. Okay. Meanwhile, you do have, again, I mean, this is kind of, if you could ask what you want to see is this, big bear market, bottoming out phase. Now you have the IPO fund acting well, ARK, again, I'm not an ARK guy, but, ARK acting pretty well. Yes, there's resistance, but I'm just saying the trend is up. FFTY, which is kind of the IBD 50 index or some fund that tracks basically growth stocks. It fishes in the same pool that we do. High relative strength, good earnings growth, good sales growth, that sort of thing. You can see a nice, powerful advance here to new multi-month highest level since December. So you're kind of getting everything you want to do, okay? Before we get into stocks that look good or potentially setups, I do want to just, things have been pretty good for a few weeks. I'm optimistic, we can be nicely higher many months from now. So I'm not sitting here saying, to go flip stocks after 6 days and sell them and take your profits. That's not me. Like I said, I'm intermediate to longer term. But one thing we do like to do is take partial profits. And I did get a couple questions this week. Like someone asked me actually this morning about Supermicro, and he's owned it for a while, so I don't know what that means. But, if you own something like this, obviously it's a tiger by the tail. But, just recognize the stock is up from, 40 last summer, so a year ago. Here it is at 250. Okay, and looks great, and it's one of the AI leaders and all that sort of thing. But, it's also, more than 100% above its 200-day line, all that. I'm not predicting anything. The thing could go to 500, but maybe you sell a portion of it. Not a huge portion, but, maybe you sell a quarter of it or a third. It's up to you, but just maybe you ring the register if you have a decent-sized position, you've been riding it for a while, and then you trail a stop for the rest, and hopefully the stock goes to $2,500, but that way you kind of are able to, feed the ducks a little bit while they're quacking, but still have that sort of, I don't want to say optionality, that sounds too fancy, but still have that potential for a big gain, you know what I mean? Near term, some of these things, like this is Martin Marietta, construction aggregates, big picture, again, kind of coming out of this bottom area, but it's had a good couple of months, it's stretched to the upside here. It's up almost every day here in the last month. Maybe you take some partial profits. Vulcan, same sort of thing. Vulcan is Martin Marietta's peer, VMC. EXP, this is Eagle Materials. You just get some of these things that sort of tighten up. So let's say you were able to buy some in here, which we did in top 10. These are all in Cabot top 10 trader. And then the thing just races higher. Yeah, maybe you throw some shares overboard and, hopefully, like I said, hopefully the stock doubles in the next year. You still own a good sized position. But in case it doesn't, or in case the market hits something goes wrong in the world, at least you took some off after a few good days or a few good weeks sort of thing, okay? And then this is unusual. Again, this was in top 10. This is Unity Software, which, it's a hot potato. This is not a liquid leader, okay? Got destroyed, bottomed out, and recently has seen some really, really good buying volume. So it's not going to be your core. This isn't like Fidelity is putting their entire portfolio in it, right? It's more of a trading stock. But again, something like this, it's a very volatile stock. if you're able to get it on the pullback and then a few days later you're up 15, 20%, my point is just it's okay to take some partial profits while still holding most of your position, because the big money's in the big swing. But if you do run a concentrated ship like we do, sometimes taking a few things off will actually allow you to, to use this example, taking a few things, shares off here puts a little money in your pocket, number one. But number two, it does let you more easily handle the pullback. So when this inevitably does pull back at some point, it's not like, oh my God, what do I do? It's sort of like, well, I already took some off. Let's just see how it plays out. Maybe it has to meet up with a 50-day line somewhere down here in the future. But anyway, so I don't want to sound too cautious because I'm pretty bullish. I'm more in the buying mode. But if you do have some of these things that are taking off, don't forget to, throw a few shares overboard, take some profits. We've been waiting for it for a while, but still hold on most of your position here for hopefully what can be a longer term move, okay? Just in terms of just various setups from various stocks, just kind of what I'm seeing here, okay? Confluent, I mentioned this before. It's choppy, it's volatile, it's not lower price, but $35, so it can move around many percent a day. But just the weekly chart, there was some selling volume near the top here. So again, it wouldn't surprise me if this takes a little bit of time, but you just have a nice thrust higher here after your bottoming formation. It's got a great story and great sort of long-term profile as well. And now you have a pretty tidy 3-week consolidation in here. Again, maybe you have another sort of dip and the moving averages catch up, but CFLT looks pretty good. Monday.com is another one, very, very volatile stock, MNDY. It moves 7 or 8 points a day from high to low. It's a $180 stock, but still it's 5% a day or something, 4%. But just again, you just had this huge move, and then really not much of a give here, and you see the volume here, really not much selling. So it just on a technical basis it looks good. Q1 report was great, profitable 2 years ahead of time, or ahead of expectations, I should say. You had this weekly volume cluster, and now just kind of this tame consolidation. So we are seeing some of these in here. If the NASDAQ does have another wiggle, you're going to probably see something like Monday and Confluent. I'm not saying they should do this, but they might pull back some more, or rally up here and then chop around or something like that. But in general, these are the sort of setups that look pretty good to me. Okay, DraftKings, another one's not really quite with the tech stuff. It's kind of battling this. We're seeing some of these stocks that had did nothing wrong. I mean, it's been riding its 25-day line, you can see, which is certainly nothing wrong with that. Just kind of not quite punching out yet, but it looks pretty good here. The weekly chart to me looks really even better. It kind of had this breakout, I don't want to say ahead of the market, but very early on, and then it's been kind of chopping. It's almost not an ascending base, but sort of like that sort of thing. So we'll see how it goes, but DraftKings one that I do like and I am optimistic on. One thing I was gonna actually maybe record a short video on this. Back in, we own some of these, unfortunately, small positions, thankfully, but back in, this was in May, early May or earlier, some of these stocks, growth stocks were still death, okay? So earnings season was just like, they were just killing things for no reason. But you have to respect it because you didn't know if it was, things were going to keep going. But this is on holding. And this was one, and I do wonder if this was just sort of almost like when you see a big, powerful earnings gap from a stock later on in a bull move, and it looks good, but then it immediately sort of fails, and it's like, oh, that was too obvious. It was just too late stage. I don't want to say late stage isn't the right term, but I almost wonder if some of these things that got nailed in April or May was just kind of like too obvious. Like, it was just sort of the play. People were hitting the stock because there was some minor bad news, or not even. It's too highly valued. But you can see on holding, it's got a great story. It had this huge blast off. I talked about it a lot, and we got whacked out of it. But now here we are coming back. It's only 5% off its high. I wouldn't say it's the best story. The best setup of all time. We're kind of running right into this area. But it is back on my watch list. Let's see. And especially if there is some rotation where some of these retail names kind of come back to the fore. Another one in the same boat was Allegro Microsystems, ALGM. Same sort of thing. This was a little bit earlier, but it kind of just cascaded lower when they were killing growth stocks. And it's, nothing dramatic, but just been kind of working its way back. Now it's stretching its legs a little bit. Usually when you see that, it will start to kind of chill out here a bit. So let's see how it goes. I mean, maybe these things come up here and come right back down, and it's like, forget about it. But especially with ON, if you do get some rotation into, or a broadening out, I guess I would say better, into some of this growth retail, which has been at best correcting and consolidating the last month or two, that would be kind of interesting. Sort of on that same play, or on that same theme here. So here's shift 4. Great. I mentioned this. It was one of the original ones to kind of break out of a low level base right around the turn of the year. Got going here, and now it's built this 13-week structure. The biggest volume in here was support, and it almost came down to the 40-week line. I don't want to get in the weeds, but now it's kind of popping. It hasn't been a lot of volume this week. In fact, there's been like no volume. So who knows, but at this point, you do wonder if this is like, the story's been good, the numbers are good, the estimates are good, everything sounds good. The stock's just been languishing, and especially maybe if financial stocks are getting going, that's kind of has a loose connection to the payment theme. So this is one I'm intrigued in. Wingstop, kind of same sort of thing, not as dramatic, but this is kind of, like I said, growth retail. It's had some tightness in here. It had a 4, 5, 6 week pullback, but some tightness at the lows, and now it's trying to get going. Is this right here, the buy signal of all buy signals? No, of course not. But you kind of want to keep a broad eye and not just look at the stock that went up 100% in May, the AI stock or whatever. Those are good too, but keep your eye on other stuff too, because those could easily rest. Not saying they will, but they could rest and other things get going. We're seeing some of that. I mentioned the airlines. I'm not really a guy who's ever going to chase an airline stock, higher, but this is Delta. It looks like the leader in the group, and just, the numbers are huge. The cash flow is huge. They do remind me a little bit of the oil stocks a couple of years ago in terms of the earnings and cash flow might be sustainably higher, not just higher for a couple quarters because the economy's good sort of thing. So Delta's one, United's another, UAL got hit here, but after a pretty big run. So those are kind of interesting. I wanted to mention Nvidia just because it is kind of the flag bearer of the bull market in terms of the growth. And just on the weekly chart, day to day, they had a Chinese chip ban or whatever this week. I don't know, whatever they might do. But since this move here, just there hasn't been any selling, and this might be another kind of 3 weeks tight in here. Doesn't mean, it's no guarantee or whatever, but so far it's kind of tagged its 25-day lines holding. I don't know. I don't have a great advice for you, like saying, oh, that means it's going to go up, but I would just say keep an eye on it. If nothing else, Nvidia would be a clue for the growth area of the market. But number two, I do think if we get a little bit more shakeout, or say the NASDAQ does pull back like I was talking about, I do think it could set up a legit opportunity going forward, okay? LRCX, I've mentioned, there's a lot of chip equipment plays that look good. But again, I'm seeing a lot of this action where you have this consolidation, you have this nice volume rally, then you have this tight consolidation. Again, it's a $600 stock, so it's not going to be as volatile, but tight consolidation, and now it's trying to resume. It's not quite showing the power yet, so again, maybe a wiggle, but overall looks pretty good there. I mentioned construction and housing, so this is TopBuild. This was in top 10. Again, it's kind of coming into some old overhead here, but this, when you see this sort of action, there's no guarantees, but just a very persistent advance, right? Every time it pulls back for a couple hours, someone's there buying it. So if you do get kind of a shakeout or a tightness, that could be an idea. And then just a couple things that are a little bit off the beaten path. Just noticing Airbnb, there's been some bad headlines. Actually, Jacob Mintz pointed out to me that rental rates are falling. It's always been a good story. Obviously, it's the leader in its field. It's an $80 billion market cap. And it obviously came undone during the bear market. But it had this nice rally, and now it's been sort of trying to build this base. This isn't good. A few weeks ago, that big volume. But let's see, with travel working, with cyclicals working, with the stock still pretty new, over the last couple of years. Nothing I'm doing with it here, but just kind of keeping a loose eye on it. Maybe you get some good news or some real ramp that shows that the institutions are buying, but just kind of a name to keep a distant eye on. Li Auto, Chinese stock. I know we all love Chinese stocks, but it showed some signs during the bear market before finally giving up the ghost. But again, it kind of had this rally, built this nice structure, and since breaking out in early May on earnings, big breakout, multiple days, it's been acting really well. Nothing, you're not catching any headlines, but acting really well. A little bit extended here, but that looks interesting. Cloudflare, just noticing this as a setup. I'm not huge on the old leaders. This thing has probably hit its point of peak investor perception relative to the market up here. But it did bottom out here. It did get some win from the AI thing. And I just noticed, again, you kind of have this is almost what I wonder if some of these stocks are going to do, where they did shake out, it came back, then it kind of pulled back again, and you can see it's just getting a little, I don't want to say tight, but just more under control. It's probably not something I would go after, but if you did get some sort of thrust higher, maybe after a little bit more rest, it would be interesting. And last but not least, this is way off the beaten radar, but I think I mentioned this last week. There's some oil stocks that look pretty good. Again, it's not my cup of tea, especially when so many growth stocks are working, but I just find it interesting that like this is USO, which is not a perfect match for oil, but you can just see it's come down and just kind of been dead in the water here. And I think this correlate, I think it's around $70 now or 68. I don't follow it every day, but it's just been kind of sitting here, nothing much. And natural gas has been really low, under $3 or whatever. But yet you have something like, here's FTI, got hit, but just nice base. And now it's kind of letting loose on the upside. Maybe you have a name like CHRD, CHRD, which is set. This isn't even adjusted for dividends. So if you adjust this for dividends, the stock's actually right up near all-time highs. But CHRD is acting very tightly in here. And then this is really thin, but this is the old Diamond Offshore, which is a offshore driller, like deep sea driller, which has been out of favor for years. A lot of them went bankrupt. But again, this kind of came public, worked its way higher, and just kind of had this base. And you can see it's been up almost, all but 2 weeks here in the last couple months, and now it's trying to break out on the upside. I just find it kind of interesting. Sometimes I look at these groups that are in the doghouse that can, they can move. I mean, I'm not talking about consumer staples, but something in the doghouse that can move if the cycle turns. And here you have some stocks that are already pushing higher. But those aren't the main things, of course, I'm following, but I like to show them up on this video. So we'll see how it goes. Again, I think near term, it's probably more of a coin flip. Again, we have good news this morning. Inflation's coming down. The market's near a new high. So there's a little bit of short term, near term, maybe some complacency sort of thing. But overall, maybe that leads to some discomfort here in the next couple weeks. Maybe not. But overall, I just think, you look at leading stocks, leading indexes, the broad market, and probably, I hope, your own P&L. And, everything's kind of pointing in one direction. So, after, if this was 6 months from now and everything's pointing in that direction and people are really exuberant, that's a different story. But right now, kind of coming, 5 or 6 weeks after the market kind of kicked into gear, call it probably 8 weeks, right? Early May, something like that, 7 weeks. It's still pretty early out there. There's still a lot of people that are probably underinvested. So what can I say? I'm pretty bullish and looking to put more money to work. Okay, have a great long weekend. Hopefully you guys have a 4-day weekend. And we'll be back again next Friday with another Cabot Weekly Review.